Welcome back to another episode of A Smart Money Moves Fresh Minds. I'm Joe.
And I'm Wesley. We're tackling two financial products that stir up a lot of debate, life insurance and annuities. We have two sides of the aisle here. Some people love them and some people roll their eyes when they hear those words.
Yes, annuities and life insurance have kind of a bad reputation. And honestly, a lot of it comes down to misunderstanding, bad sales practices, and a lack of education.
That's exactly right, Joe. So today we're going to break both of those down. Why do these products get such a bad rap? Where do they actually make sense in someone's financial plan? And how they can be powerful when they're really used in the right way.
Let's start with the criticism. Why do people groan when they hear annuities or whole life insurance?
A big reason is sales tactics. For decades, these products were sometimes sold as a solution to every financial problem. And that was mostly because the commissions were high. That left a bad impression.
And with annuities, complexity adds to the frustration. Many have multiple fees, surrender charges, and riders that people don't fully understand. If someone buys without knowing the rules, they can feel trapped. And there is a lot of bad marketing practices out there that people don't know.
And life insurance really has a similar challenge. Term insurance is fairly straightforward, but permanent insurance can get confusing with all the nuances and different riders with the policies. And without proper explanation, families sometimes they buy coverage that they don't really need, and then they don't end up keeping it long enough for it to really be effective.
So the bad reputation really comes from overselling, complexity, and lack of education, not from the tools themselves.
Now, let's flip the perspective here and look at the useful side. When used appropriately, these products can solve very specific problems.
Take life insurance. At its core, it's protection. There is a cost for safety, as we hear from one of our partners, Ken Reese, tell us all the time. Term insurance provides affordable coverage during the years you're raising a family, paying off a mortgage, or building wealth. Permanent insurance, on the other hand, can provide lifelong coverage and create liquidity for estate planning, business succession, and charitable gifting.
That's exactly right, Joe. The key here is to really match the type of policy to the financial need of a specific client or a specific person. It's not about buying the most expensive option, but about making sure that all the risks are covered.
With annuities, the value isn't about high returns. It's about income security. Annuities are designed to have a guaranteed stream of income, often for life. That can make them especially powerful in retirement planning.
Now, let's take someone without a pension, for example. An annuity can act like a personal pension, helping cover basic expenses alongside Social Security, and that reduces the risk of outliving their savings and the sequence of return risk.
Now let's see where these products actually fit in a plan when we provide these to a client.
Life insurance is first and foremost a big safety net. Term policies are best for income replacement, debt protection, and providing for dependents such as young children. Permanent insurance works better for long-term goals like funding estate transfers, providing liquidity, or creating a legacy.
Annuities, on the other hand, show up in retirement planning. They're not meant to replace investments, but they can complement them. Think of them as a stabilizer, providing predictable income so that market-based accounts can be used more flexible.
And both tools here are about balance. They aren't one-size-fits-all, as we like to say, but when matched to the right goals, they really fill gaps that traditional investments just can't.
Now, let's look at the takeaways. And to sum it up, these products have a bad reputation because of past sales practices and complexity. Used correctly, life insurance protects families, businesses, and estates. Annuities, on the other hand, can provide guaranteed income and peace of mind in retirement. The key is intentional use, aligning the tool with your actual financial goals.
And when you strip away the confusion, these aren't bad products, they're specialized tools. And like any tool, the value comes from using it for the right job.
So now back to a hypothetical story that Wesley and I always bring up. Let's bring this to life of a real world scenario.
Awesome, Joe. So here's the first one. Let's imagine a young family just starting out. They have a new baby, a mortgage, and one spouse is the main income earner. If something were to happen to that spouse, the other could struggle to keep the home and provide for their child. A simple term life policy ensures the family is financially secure, even if the worst were to happen.
Scenario 2, someone approaching retirement without a pension. They've saved, but they worry about running out of money. A portion of their savings goes into an annuity that guarantees a monthly paycheck for life. Now they know their essentials, housing, food, healthcare are covered no matter what the market does.
And a third scenario, we have a small business owner. They build a really successful company and they want to pass it on to the next generation, perhaps one of their children. But estate taxes and liquidity needs can be a real issue. Permanent life insurance creates cash when it's needed the most, making it possible for the business to transfer smoothly without being sold under pressure.
And one more, charitable gifting. Some people want to leave a lasting legacy. Permanent life insurance can magnify their gift to a favorite charity, allowing them to give much more than they could with cash alone.
These scenarios show us how life insurance and annuities aren't just abstract products. They're solutions to very real challenges that people face today.
And that's exactly right. It's about matching the right tool to the right job.
All right, guys, that's a wrap for today's episode of Smart Money Moves Fresh Minds.
If you enjoyed this, share it with a friend and tell us what topics you would like us to break down next.
All right, we'll see you next time.